And that being the gating issue.
I saw GE Vernova downgrade today. That's about data centers and power. I'm a big believer in data centers and power. You know how I feel about natural gas.
I know, but my point is that it may not be that the need is not there for the Nvidia chips or the need for the compute, but the ability to actually construct it as quickly as possible may be more difficult.
Well, did you think the Accenture deal was a big deal with Nvidia?
I don't have an opinion on it. Did you think it was a big deal?
You need it to be not just hyperscalers. You can't build a business, and they're not, by the way, around just Mark Zuckerberg and Elon Musk. I like the deal because what it said is that the large companies that don't know how to use it are going to go to Accenture, and Accenture will figure it out for them, or they're going to go to Dell or HPE. So there's these other companies that may want to buy them, not just Meta and not just Tesla.
We did mention yesterday in your absence, though, executives at chip companies selling about $1.3 billion in stock in the quarter.
It's endless. Selling's endless. And look, they've made a lot of money. Look, people sell for a million different reasons. And if they didn't sell and you were their advisor, I think you would say, look, I should resign because you've got so much money in these. That's my only explanation for it, because otherwise, why not let it ride? But these people have such huge gains. And they could also be saying, look, capital gains rates will be going up if one of the two people who gets in has got a Democratic House and Senate. Capital gains going way up.
This video discusses the immense demand for Nvidia's Blackwell chips, driven by the rapid growth of AI and large language models, particularly for inference tasks that require massive compute power. While training these models will eventually slow as available data exhausts, running them will continue to demand increased computational resources. Nvidia's growth is strong, but challenges remain, including infrastructure constraints like data center power and capacity, which could hinder chip deployment. The conversation touches on Nvidia's stock performance amid concerns about potential market saturation and infrastructure limit. Despite some short-term slowdowns, Nvidia's stock has strong growth potential as AI adoption continues to expand, and other companies like Accenture are stepping in to help organizations use AI effectively. These dynamics have boosted Nvidia's visibility, with demand coming from a range of enterprises beyond major tech players. Lastly, Nvidia recently announced a substantial $50 billion stock buyback program. The company intends to use its cash flow effectively, possibly emulating Apple's model of reinvesting through buybacks to manage stock compensation and maintain value. This buyback signals Nvidia's confidence in its long-term growth as it looks to expand globally, despite market volatility and potential political impacts on capital gains.
But what does that have to do with the fact that we're in the earliest days still?
No, we're in the earliest
days.
Need for
compute and everything else.
Okay, when Jensen said that demand's insane for Blackwell, that lasted for about, we had a little bit of gain, a little bit of bump.
Yeah.
And then today we have a bigger bump. It's like the interview occurred yesterday. Crazy town.
Given what is yet to come, what is just beginning to come in terms of the need for compute from these large language models, it's not just the training, which will come to an end at some point, or at least slow down, because there's basically you've taken in all the data available, then you have synthetic data. Right. But the running of the models themselves, the inference is using enormous amounts, even with the increase in efficiency from every new version of ChatGPT, for example. Enormous increase in efficiency, but then it allows for all sorts of new things that require way more compute.
Well, I agree. I've been a big bull, but I'm just saying a lot of people feel enough. I mean, that that Nvidia stalled, that Supermicro was the worst performing stock in the S&P last quarter.
Maybe
that's
maybe it gets back to the endless conversation we have for good reason here about data centers and power.
Well, and I think you could also say earnings expectations. The Mag 7 have been over-delivering on expectations. The S&P 493 has actually missed expectations versus the start of the year.
And also, the last thing that they could ever do is come out with something too early, bugs or whatever it may be. Yeah. They got to make sure that this thing is golden. And that's why, because all the infrastructure is built on it. And then the fact that they actually are going to see some in the October quarter, that put that to rest.
Yeah.
And look, I just think we sit here over the coming weeks, over the coming months, and the stock's all-time highs, because it's like, I think as more start to do their checks, they realize wow, demand's not just Mag 7, it's actually other enterprises and sovereign And remember, you haven't even tapped into Europe. Globally, we're really talking essentially right now, it's much more of a US-centric story with some China outside the sanctions.
I want to ask you about the financials. They announced a new $50 billion buyback on top of a pre-existing authorized $7.5 billion buyback. I would ask you, would it make sense for them to actually act on this authorization, or just keep it in their back pocket in case there's some sort of like market-wide sell-off or something? And then the second part of that question is, are these true buybacks, or like to shrink the float, or are they just being used to sterilize stock-based compensation and new share issuance?
Well, look, I mean, I don't think they're press release buybacks, like in terms of just like, sending a signal type thing.
Right.
I do think that they've recognized some of the volatility that they could see. I think that, the Black Monday, Tokyo scare, a little sort of, clearly got in front of their radar, in my opinion. So it's a true buyback, but the reality is that when you look at AI engineers in the world, the best right now, it's really Nvidia, OpenAI, Microsoft. So as much as people could fret about like options or whatever it may be,
like new stock issuance as compensation,
they have to keep the AI engineers, because that's ultimately key to their success. But it's actually an incremental buyback. I think they're going to go right off the page of Cook and Apple. They're going to actually implement it, and then eventually, in a year or two, we're not talking about $50 billion. We'll be talking about $7,500 billion type buyback.
There's just too much cash flow. They have to do something with it. You can't just plug it all back into CapEx.
Exactly.
All right, folks, NVIDIA. You watching NVIDIA? It continues this sort of almost stealthy move at this point. Now, this morning, it got a boost from Morgan Stanley, which it says it expects Blackwell production to reach 450,000 chips. You know what that means? That's $10 billion. This is the fourth quarter. Obviously, that's great news, and good news for my next guest. I want to bring in Gabelli Growth Fund's portfolio manager, John Belton. John, welcome to the show.
Thanks for having me.
You've got a lot of NVIDIA, right? This is one of your favorite ideas right now.
Yeah, one of our biggest positions in all of our growth funds at Gabelli.
The narrative over the Wall Street narrative has been the play is over. Not necessarily, we see the orders. Obviously, the orders are mind-boggling, but that this is sort of a toppy-ish kind of thing. It can't last forever. The stock is ahead of itself. How much of that concerns you?
Well, let's just go back to what CEO Jensen Huang said this week on CNBC. He said the demand for their chips right now is insane.
Insane.
It's a pretty strong word.
Yeah. Well, I never heard of that network you're talking about, but I did hear the word insane before in a commercial. I had fun with this. Before you were born, there was this retail outlet called Crazy Eddie, and the guy used to come on TV and say, our prices are insane. Then they went out of business. It was a scam and everything. So
I think it's a different kind of insane he's talking about here.
Okay. Is he laying it on too thick?
Well, I mean, we can talk about NVIDIA. I think we're still early innings, and the AI. I think AI is a technology that's going to have very deep and long-lasting impacts for many years, and NVIDIA is going to be one of the prime beneficiaries of that. But I think stepping back, I was watching one of your earlier guests talk about the Magnificent Seven, talking about being kind of long in the tooth in that rally. I think I would actually defend a lot of those stocks. I think NVIDIA included. And maybe let's remove Tesla from the conversation. We can call it the six-pack. These are companies with really strong revenue growth, strong margins, still expanding margins, good shareholder-friendly capital allocation policies. And year to date, I think they've generated more of the index's earnings growth than they have the index's performance. So I think the fundamentals really do justify the stock performance year to date for these stocks.
By the way, I agree with you. I think it's amazing. Everyone's saying, the 493 are going to have pretty strong earnings growth at the end of the year, and still the Mag 7 will probably enjoy better growth at a much more complicated.
In summary, the video highlights the massive demand for NVIDIA's Blackwell chips, fueled by the growing need for computational power in AI applications, especially for running tasks on large language models. While the initial model training may slow, ongoing model usage will require substantial infrastructure support, including power and data center capacity, which could create bottleneck. Despite these challenges, NVIDIA's position in AI remains strong, with new players like Accenture helping companies adopt AI, driving NVIDIA's demand beyond traditional tech giant. Additionally, Nvidia's recent $50 billion stock buyback announcement signals its confidence in long-term growth, even amidst market volatility and infrastructure concerns. This strategic move not only offsets stock-based compensation but reinforces Nvidia's value for shareholders, suggesting a long-term commitment to AI growth and expanding global market. Do you think Nvidia's growth can sustain itself as AI demand rises, or will infrastructure challenges slow it down? How do you feel about Nvidia's large buyback? Does it reflect confidence in their future, or could it be a response to current market volatility?